Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. We are just seconds away from the opening bell. We've had a good earnings this morning from Walmart. I made myself a short profit, a very quick profit, about 3% profit on a trade. Just got in, just got out very quickly, and good. It's helping my portfolio come up now. We're in the red at the moment, but it won't be much longer, I don't think. Things are looking okay this morning. All right. We've got a few things to talk about today on the show. I'm just about to... what's happening here? Why can't I not update my... Oh, there it is. The Walmart earnings. There we go. I'm just sending the Walmart earnings now up to the studio. There we go. We've turned green. That didn't take long, did it? There we go. The studio is green. Lovely. Let's have a little look across the board. See what's moving. The bell has just gone. And we had a nice earnings this morning from Walmart. It was a small beat, but it was a beat nevertheless. And it's made my portfolio green for 10 seconds, but we will keep it there. I'm no problem with that at all. Right, let's get ready to rock and roll. I'm just uploading. Oh, we'll go back red just for a moment, but I don't think it will stay red for very long. Walmart earnings, I'm just uploading that, so that'll be available for those of you that missed the main show this morning to catch the Walmart earnings, which is enhanced for you audio-wise. And you can catch that later. Just bear with me as I click a couple of things. It's already rendered. It's now about to upload, and it'll be there in about an hour. At the end of this show, you can go and check it out. So that's what I'm doing right now. Walmart earnings is going up at the same time as we're streaming. We're sending up the video. There we go. Right. Come out of there. That's it. Good. Right, okay, let's see what's moving this morning. We were green for a couple of seconds, nevertheless, but there we go, not a problem. Let's see who's with me in the chat. Who's with me first of all? Let's go through and see who was here first. Hello, Jose Quintana. Hello, family. Hope you're all made gains today. I haven't forgotten your competition. It's back to back. I will get it done as soon as possible, Jose. Good morning, everyone. James 007. Hope everyone is well today. Lance Strength. Hello, says Wade. Seth Houston says good morning to everybody. Welcome to you. Okie dokie. I think we've covered everything. Welcome all on Discord. Yep, there's nobody new in there. Breakfast bar's fine. I've already checked that out. I'll show it you later on when the rest of you come in. If you're first time here, do click subscribe and ring the bell and give us a thumbs up. I see what's going down today. It's FFIE. It's a very, 60 cents now. Oi, oi, oi. Future Faraday is going down today. I'm not buying any more. There's no point buying any more. I tried to do what I call a moon bag to see how it would go, but I can't chase this down. Extremely high risk. You can afford some risk. It's like buying a lottery ticket, but you can't chase it. This could go down to 10 cents a share. It really, really could. So I'm not going to keep buying it and buying it and buying it regardless. This is better than Mullen. Mullen is designed to be a scam company. This actually is in a legit company, but it is going through a lot of pain right now. And that's what you want to look for. However, you don't want to just keep buying and buying regardless because you don't know where it's going. You don't care how smart you think you are. Anyway, Sim Simmer, welcome to Sim Simmer. Lovely to have you here. It's wonderful to have one of my members from Switzerland here today. Buckaroony Hood dropping as well. Yeah, it's we've had some really good days. We're trimming off now. This is healthy. Nothing wrong. No fear here for me whatsoever. That's why this morning I took a very quick trade from Walmart. Walmart, I bought at the bottom here. There. And I sold it all there. Okay, we're having a red day. Just a little small trim. Earnings was good, but we've got difficulties for the consumer. It's exactly what we've been saying over and over again. Interest rates now will be coming down, but they won't be coming down until the spring and the summer, so there's still some pain to go. But it's not even about that. It's about what we've always said. Pain for the consumer and the economy is behind the markets. The markets are now knowing the recovery is coming, but now the pain is being felt by the consumer and the economy. That will right itself next year. However, for now, things are going to be difficult. That's what the point. It's a lagging indicator. The pain that the Fed have put on the market is causing pain. It's now really kicking in, which is why inflation's coming down, but it's still high, and it's still inflation. The rates are high. So the consumer and the customers and the people that spend the money are still seeing, feeling the pain. But that means that's the bottom. That means the markets start buying in because they know the recovery is next. So Walmart was a good earnings. However, its guidance isn't great in total for value. If you want to buy the stock at value, it's too expensive. There's our Swiss flag there for Simmer. Look above my head. There's the flag that just going by there. There's your flag. We added that for you. We added Poland yesterday as well. There we go. If you are and become a member of our channel, we'll fly the flag for you. All right, Hood dropping as well. I have a lot of shares in STNE. Very excited. Robbie Cooper, I believe we've got your STNE for Robbie Cooper. It's 1, 2, 3, 4, 5, 6 reviews down the list. You can bump it up to the top, the very top, if you beat a $20 super chat. Or you can do a $1 super chat, and will be right after Rocket Lab. So it'll be later on today. If you want your STNE, just for $1, it'll be in second place. $21, it'll beat Jason Fallon and go straight to the top. We're going to do a review in about 20 minutes, and it's Rocket Lab at, I beg your pardon. It's Carnival Cruise Lines, I beg your pardon. That's what comes first, unless you do a $21 super chat. If you do a $1 super chat, it'll be second place after CCL. All right. Okay, Buckaroo. I'm so glad I sold it in the other day. FFIE. Yes. I started to buy it because there's maybe a few things I liked about it, but we shall see where it goes today. This could go down to 20 cents. There's nothing to stop it now. There's no production, nothing going on. It could. But I'm holding my shares. I've written it off. It's the same as anything else. You allow a certain amount for very high risk. But right, Robbie Cooper has now gone into second place. So Robbie Cooper, I will take your STNE. I will take it out of the list there, and I'll put it right after Jason Fallon, which is CCL. You've done a $1, so I should put it down there. If anyone bids more than $1, they'll go above you. But right now, you are in second place. That should be, unless no one does one today, that means you will be later on today. Maybe this morning, but definitely this afternoon, unless somebody bids higher and it will move down. Okay, good morning, afternoon, gents from wet Southampton. Southampton, I did the Mayflower Theatre. Lovely to have you here. In the UK, we have all been had rain recently. Right. I'm down $400. So what? We've just had several days of big... Exactly. A correction day. That's all it is. Hi, good morning. And the thing is, it's healthy. You need some trimming off because then people can buy back in again. What you're doing is building higher resistance levels. Higher support levels. As we go up, trim a bit, set a level here, go up, sell a bit, set a level here. This is all healthy. This is what we need. You can't just keep going straight up. You need people to sell, take profits. It drops a bit, and then new buyers who want to get in because the markets are turning bullish will start buying in. Robbie Cooper. Oh, you didn't put a comment down. Okay, he doesn't read it out. With Hood dropping slightly, will you be increasing your position? No, I won't. I've got a big enough position in my portfolio already. Morning, Stephen Lewandowski. I would really like your views on oil at the moment. I trade a lot of gas, but I'm thinking of getting into oil. Actually, the price of oil is dropping a lot. Yes, I've got Chevron, as you guys know. I bought when it went down, and I was down like 20-odd%. I'm now down 10. The dividends are great with this stock. I'm not, my last time, I'll only buy it if it's my all-time low. I last bought oil at 146. I bought 10 shares at 146. It's now 142. So I would buy oil I can buy oil now at 142. That is that for me is a low. Over the week, it's a low. 142, 142, 142 over the 3 month, over the year, the 1 year, the 5 year. Yeah, that's a buy at this level, 142. Yeah, 142. Oh, let's wait for it to drop again. I want it a bit lower than that. I'm down. Yeah, 142. So let me see if I can buy some Chevron. CVX 142. I last bought it at 146. So it's a $4 discount, right? 146. So 142. 143. So let me go into Chevron trade, buy, limit order, a limit order 143, 143, 140, 143, 143. 3 p.m. today, 10. Let's see what happens. Go from 10% down, 10% down, 10% down to 6% down. There we go. I just bought another 10 shares of Chevron here. I'm now down 10% down to 6% down. Good. And let me just check, and I should have done it before, but I wanted to jump in. Let me check the dividend position. That's a really good dividend with this one. I hope I haven't missed it, because that will really pay for it. CVX. I really hope I've not missed that. Chevron. Might have missed it. Let's have a look. Oh, it's today. It won't count. It won't count. But of course, the 15th, yes. It's yes, it won't count. It won't count. It's but of course yesterday would have been the wrong time. I could have bought it a week ago, but yeah, unfortunately it won't count. Unfortunately, but that is $1.51, 16th of November. It won't count. It won't count. If I bought it yesterday, it would, but of course, yesterday it was too expensive. So it won't count. $1.51, so $15.10. I'll get next quarter. So I will add that now to my list. I've just improved $15 a quarter. It's a shame that, but that's fine. Can live with that. Let me go to my dividend notes and let's add in my dividend. So Chevron 26 becomes 15, 20, 30, 41. That'll be 41, 20, 30, 36, 41. Yeah, that'll be 41, but that won't be now until till March, okay? 41 in March. So I don't think that'll clear today. It won't settle. I wish it did, but otherwise it would have been a no-brainer. But unfortunately, it's not going to, but that's okay. I'll hold that. 41 in March. Right, there we go. So we'll add 41. What did I just say? $1.50, $15. So that'll be $520 a quarter. Now 20. That's $15, $60 a year. So that's $2,080. Just making all the adjustments now so I can see how much I'm going to get every year. Okay. Right. That's what I've done. I've just worked out my dividends. All right. Yeah, that's why it'll go down today, because the ex-dividend date was yesterday. So you're getting not such a good deal today. But you don't just buy a stock for the dividend. There are other reasons, but it's obviously good to be able to do that. Right. What's a good entry point on oil? James 007, Hydro Hustler Nursery, IBRX. I can do a full review for you. IBRX. If you are a member of my channel, I will do a full review for you. It's one of the members' perks. It's like a 20-30 minute review going through the stock, and we do use a lot of software to calculate the values and look at the balance sheet and the trading and so on and so forth. But there we go. Randy B, time to get a few more space shares to accumulate. Randy B, yes sir, good morning to you. Chevron is going down because it's buying Hess that will close in the new year. That's right. 3 couples sitting to eat. First husband, can you pass me the honey? Second husband, can you get the sugar? 3 husbands, give me the steak. 3 husbands, give me the steak cow. Very funny. I like that. I'll give you that one. Anyway, so there you go. So let's have a look at Chevron. I just bought Chevron. Now, let me do a bit of a look at Chevron using my software here, CVX Chevron. Okay, let's have a look. So the best case scenario at today's price of 143. Let me just check the price. It is. Yes, it is correct. Yeah. Undervaluation, base case, worst case scenario 26. Well, I can allow that because I'll always pay 25% for a high growth, which it is. Good valuation. Okay. Historical profit 89%. Just having a quick look. I'm not doing a full review on it. 38% margins, increasing operating margin. Okay, looking good. Balance sheet 264 billion, 98 billion. Oh, that's a good balance sheet. Look at that for a balance sheet. Very, very nice indeed. Oh, solvency. Yeah, very good cash. 57. This is a good. That was a good buy. Upside right. I will actually do CVX. This is not going to be a full review, but I am going to do a quick video on CVX because I just bought it. Who have we got in the channel? Well, if you just tuned in, smash the like button, guys. Tap there and subscribe. Welcome to the show. How are you all? Let's have a quick look how we're doing this morning. All right. Let me just do that. CVX. CVX Chevron. There you go. I'll bring it up there. And we will go through Chevron. There we go. Right. Okay. Just a quick Chevron video. It's not a full review at all. Not even close. But I will make a video on it because I've just bought it and share why I did it. 18 CVX. All right. Chevron. Okay. Diddly-dee-dee-dee-dee. Da. Right. Let's go into here. Breaking news here on Martyn Lucas Investor. I've just made a purchase of Chevron oil. Oil is now going down. It's getting attractive, particularly CVX. I like it because of the dividend payout, $1.50 plus. It's a very good dividend on this one. This is not a full review, but I am going to show you why I bought it and have a quick look at the numbers. So if I share with you, first of all, my position so you can see. Now, I was down about 30 or 40%. I don't know what I was down at the time. I forget now, but it was a heck of a lot. Then I was down 17%, then I was down 10%, and now I'm down just 6.7. Not by the share price not by the stock going up, by dollar cost averaging down. I bought when oil was too expensive, and I kept buying and buying all the way down, and I've just done it again. So I'm only 6% down now. Now, the reason why I'm making this video today is ex-dividend date today. So it won't count today on my next, for the December payout. So I won't get this $1.50 plus dividend until March. However, that's why it's selling off today. Well, not just one of the reasons, but of course, ex-dividend date, when you've got such a high dividend, and today is the day it's passed, because it won't settle until tomorrow, so it won't count. But that's why I bought some. So I was down just a few moments ago, over 10%, and now I'm down 6.84. I bought another 10 shares. I've got 27 in total now. So oil is low now, and it's a good buy. And let me share with you very quickly, this is not a full review, but I will share with you the valuations. If we look at a best case scenario, which we're not in right now, we're undervalued by 57%. Base case, 21%. Well, we are certainly there now, 21%. And it was slightly better than that, because on the bell it went down lower. So this was before the bell, so it's gone down slightly lower. So it's even better. Valuation is probably about 23 now. Undervaluation. That's good on the base case. The worst case scenario, 25%. It's actually about 23, and we are certainly not in the worst case scenario at all. And I'm always prepared to pay up to 25% for a good growth stock with a great balance sheet and minimum debt situation. So that was okay. That was a go for me. That's why I was there. That's why I used this software along with everything else. Historical profit, 89%. It's a very good company. Possible value trap detected. Very, very important to announce this. Thank you very much. Gods for me. Just subscribe during my live video I'm making this. Possible value trap detected. A value trap occurs when a stock appears inexpensive based on fundamental analysis, but fails to reach its intrinsic valuation over time, often due to underlying issues not reflected in quantitative data. So it's very, very important. Scrutinize beyond numbers. Assess long-term potential. That is what you need to look at. When I always talk about this, when you look at valuation, you need to look at other things. So I always do, okay? Now then, we look at the revenue, and we can look at the revenue. We know about the big purchase which is happening next year. So there's a bit of a downturn at the minute on revenue, a bit of investment going on. You can see, I'm not going to go into a full review of the stock. This isn't that. This is just a quick purchase and told you why I did it. Look at the balance sheet. This is the main reason. The assets is 264 billion, liabilities 98 billion. So we've got a very, very healthy balance sheet. We've got no concerns with Chevron at all. It's a top S&P contender. Well, it's not a contender, it's on there, but you know what I mean. When I use the word contender, I think of a fighter. You know what I mean? Long-term debt 20 billion. So it's got a big debt, but nothing in comparison to its balance sheet. As you can see, gross margins are just trimming off a little bit from where they've been, but still healthy. But this is the most important thing today. The profitability score is 57. It's not bad at all, and it's going to get better next year. So I know we're going to get an increased profitability next year, but this is still a good profit score. It's amber, just about turning green. You can just see it turning from amber to yellow to green. So that's pretty good. And solvency, the business is not going anywhere. 76, you don't get much higher than this. So it's a very good balance sheet, not going anywhere. Wall Street analysts give it 58% upside at the highest, 31%, and 17 at the worst. So we like to have anything over 15%. Otherwise, you just buy the S&P. That's the worst case scenario. So to buy it down here with the reinvesting the dividends, we are going to improve on that. So I'm very, very happy. So there you go. I just bought some more Chevron to lower my average. My average is now lowered. I was out of the money big time on on oil. Now buying it, getting lower and lower and lower, and now I'm in a good position. It's going a bit lower. I don't know how low it will go to. I'm not that concerned, but I'm happy with it now where oil is. All right. So there we go. Just a quick review, not a full review. just my thoughts on Chevron this morning. Click above my head for all my links and all my social links and my newsletter and all that great stuff. Also below in the description of the video, and more videos over here I think you'll like. As always, until next time, take care of yourselves and each other. All right, just a bit of Chevron. Time to get a few more space. Yes. Fight Chevron's going down because it's by Hess. That will close in the new year. Delph is in the house. Hiya, Delph. How you doing? I like MTDR at 53 or lower. Currently 57 for a swing trade. A barrel of crude is 75 today and dropping lower. Crude oil could go to 65 and a high of 90. Today, a barrel of crude is at 75 today and dropping lower. Crude oil could go to 65 or a high of 90. So as we can see, it's right in the middle, hence why I bought some. How is my plug today? I shall show you on the screen. Plug is bouncing up and down at the minute. Let's have a quick look at plug. There we go. You can see it bouncing up and down. It dropped off from yesterday, but what we've got today is a bit of a correction, so I can live with that. Anyway, Chevron, I am actually trying to trade out of the stock, so I'm learning the averages, earning the dividends, and just got to wait now until the spring, and we'll be all right on this. Once we got Hex out the way, we should be all right. We'll probably be in the green very quickly, and we can trim off once we get a couple of quarters of the dividends. Maybe time to take a bit of profit out of that. But anyway, there we go. Not too bad at all. I can live with that. Right. Now then, moving swiftly along. The portfolio is down today. Virgin Galactic is selling off today. It's perfectly normal. A lot of institutions are buying it right now, so it's loading up. Let me, in fact, do a quick Virgin Galactic video as well. We've got a review coming up this morning. 26 SPCE. 26 SPCE. Right, where are we? SPCE. 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 Let me load this up. There we go. Bring it to the top. That's 6 days ago. So I will share some of that, I think. Let's have a look. Okay. I will do that. I'll load that up. Okay, we've got that. Okay, Virgin Galactic, let's drop this in quickly. Okay. Breaking news here on Martyn Lucas Investor, a Virgin Galactic update. We had a massive run a few days ago. Now we're selling off a little bit. Should you be concerned? Should you be worried? Well, of course, I say no, absolutely not. And I'll tell you why. I'll give you some latest news. I'll tell you what's been going on, who's been buying, who's been selling, some breaking news for you as well. So as always, tap the like button. It will share it out to more people and you'll be more likely shown my videos in the future. So we had a nice rally the last few days, but the markets are red today. We're getting a bit of a correction. It's perfectly healthy. And the reason for this is over the next few minutes, I'm going to give you some price valuations and some really important news. So stick to the end. And also, if you want to get a little souvenir of how I'm going to get Virgin Galactic to $100, no doubt about it, and the short squeeze. Anyway, over the last few days, we've seen the stock price rally. And what we've got some trimming off going on, setting new levels of support. That's healthy. We don't want a straight up stock. Remember, this isn't GameStop. We're going to get a short squeeze. And by the way, it hasn't happened yet. Many people are asking me, has the short squeeze happened? It hasn't happened yet, but we need to understand this is not a junk stock like GameStop, AMC. I'm not Roaring Kitty. I'm not Matt Kors trying to promote rubbish. I'm trying to invest as an investor and study what is most likely to be up in the future and what's most undervalued right now. And Virgin Galactic at 150 was one of those stocks. Why I own it, why I've not sold a single share. I'm talking to some of the biggest retail investors in the world every day on the phone, and they're not selling either. Over the last 2 or 3 days, we've had a lot of institutional investors come on in, and what we're getting now is a bit of a correction, people giving up, taking some profit, that's fine, setting new levels of support, that's healthy. If we buy here and we go to here and we sell here and it drops here and people start buying here, this protects everyone down here. This sets new levels of support. It's very, very important. Am I buying more? No, I don't need any more. I've got enough shares to take me to where I want to, what I want to achieve and make me more money than I deserve. So I don't need to buy any more stocks. I'm certainly not selling anything. I'm certainly not taking profits along the way to $100 either. Anyway, let me bring you some information I thought you might enjoy. As you know, I use certain software to give me the latest information. I will tell you there is still no selling over the last few days from insiders. As we look here, there's no selling from insiders, nothing going on, which is very, very good. The last transaction was November the 10th, 21 by Virgin Galactic, so Richard Branson's Virgin Investments, when they sold 300 million worth of shares. He still owns a good proportion of Virgin Galactic. A lot of people get stressed about that. So you can see there's no real significant trading going on. When we talk about report that Michael Cole-Glazier has sold some shares, that's perfectly normal. That's just routine tax positions. He doesn't even know it's happening. It's just happening every month as a periodic thing. Perfectly normal. But I do have some information I wanted to share with you just a few days ago, give you some sentiment, and you can see I now do analysis and reviews for Alpha Spread. They like my reviews above CNBC and Yahoo and Bloomberg and all the rest of it. But there is one here I wanted to share with you this morning of some interest, and we can just comment on it a little bit. Here we go. See what you think of this. Let's have a quick look and listen here.
Virgin Galactic plans to pause spaceflight operations next year to focus on its next generation of space travel. The company also laying off roughly 18% of its workforce to decrease costs and realign its resources. Cuts are projected to save the company.
This is what we asked for in our petition, and we got that action. And you may remember, if you watched the report and you watched the review, the interview I had with Andy Shovel, we talked about this. This was what we did, and we're very pleased with the result.
Roughly $25 million annually. With 6 successful space flights completed this year, the company significantly trimmed its net losses during the most recent quarter and doubled revenue. With more on the company's path forward is Yahoo Finance's Ines Ferre. So, Virgin Atlantic
Jared,
on pause, the Fed's on pause. I'm sorry, go ahead.
Yeah, no, look, you're right. I mean, look, we are in a high interest rate environment, and we are seeing space-related companies that are cutting costs.
We also need to confirm that interest rates will be coming down in the spring. We got the CPI the other day. We got all the reports, and interest rates are falling dramatically now. And inflation is falling dramatically. Things are still getting more expensive, but the rate they're going up is decreasing, way ahead of expectations. We're going to get a pause. As I said, for over a year, the pause will come in the spring to the summer. We'll keep rates high for a little while longer, but that's okay. Virgin Galactic are budgeted for that, and now they're going to save money. So this is really good news. So this is a little bit out of date when she's saying interest rates are high. We need to be focusing on where they go next. Anyway.
And in this case, Virgin Galactic, which we have followed this stock really since they went public via SPAC back in 2019, and so much enthusiasm about this stock really and the future of space travel. And we have seen also short sellers pounding onto this stock. So part of what you are seeing.
She talked about the short sellers currently running around about the 22%. Again, it's excessive. Anything above 20 is excessive, but we haven't triggered a short squeeze yet. The media loves to share the news about the shorts. I do talk about it, but I'll tell you when we're going to get a short squeeze. It's not yet. We've gone through 2. Now we need the institutions to coming in. That was part 2. That's happening. Now we need volume to increase. So today's drop is healthy for the stock. Volume can start to increase. And once we get to the end of the year and we start getting words from the Jerome Powell that rates we're not looking at increasing anymore, not a pivot, but not increasing anymore, then this stock will explode. And that's when the short squeeze will come, not yet.
Today, that huge spike that you are seeing in that stock price is likely a short squeeze as you are watching the stock up 20.
It's not a short squeeze. I cannot believe that these are regarded as the best analysts, the professionals at Yahoo Finance and Bloomberg and all the rest of it. Really, it's not a short squeeze, and I cannot believe it. They love to sell the narrative. They love to make the news. That is rubbish. A short squeeze has not occurred yet. That has gone up because that's institutions buying. We know who's buying, how much is buying. That is not the short squeeze yet. That just makes great headlines for Yahoo Finance. That's not what we do on this channel. That is rubbish. That's why my reviews feature above theirs on Alpha Spread.
7%. But look, the street is positive about its revenue guidance for the fourth quarter. That revenue that's expected to come in at 3 million. Prior to that, the target was 1 million, and estimates from analysts was for 1.5 million. The loss per share was less than expected for the third quarter. And Virgin Galactic is going to be pausing its flights in mid-2024 for the Unity spacecraft. And this is an important point because the company is now shifting towards its Delta spacecraft. That's its newer spacecraft, which will be able to hold 50% more passengers and travel twice a week and help the company reach profitability at a faster pace.
And that isn't completely accurate either. They are pausing, but there's still going to be revenue coming in from other things. So to say we're just pausing and there's nothing going on, again, that's not accurate information at all. There's still going to be revenue for Virgin Galactic.
Case, Jared.
All right, we've got to take another name here in the space realm, and that's Rocket launching space grabbing. Excuse me.
We won't focus on that. That's not really that important. Right, okay, not for our stock anyway. So some information there, again, Yahoo Finance and these analysts. Remember, a lot of analysts that work for Yahoo and Bloomberg and CNBC, we see it time and time again. They're there to sell headlines. A lot of them have bias on stocks. We've seen it time and time again. You do the research into the analysts, see what they're buying, see what they're selling, who they're working for. It's quite disgusting, to be quite honest. Anyway, I bring you the truth. The reality is this is perfectly healthy today. Very happy to see it. Very happy to see some, not happy to see some trimming off. I don't want anyone to sell the stock. Of course not. As an investor, I want everyone to hold it forever. But that's not what I mean. What I mean is when the trimming occurs, it means institutions and other retail investors can buy the next support level. That's healthy, and I can see it already happening this morning. If I just scroll up, you can see people are buying in now. So we've got people just buying in here around about the 204, which is very healthy. When you think they could have bought it at 150 like I did, on 138, they're now buying in at 104 and 105, which is great. That's setting a new support level. Anyway, just a quick update on Virgin Galactic. Be very, very careful of the news that tries to tell you we've had a short squeeze. We haven't. These analysts talk rubbish half the time, and they just want to sell stories. I don't want to sell videos. I do want to build the most honest community in the world. That's why I'm here. Anyway, over the last few days, I've actually released some very exciting news. If you are a Virgin Galactic investor and you like all things Virgin Galactic, of course, you all do, I presume. I just released some items of Virgin Galactic merchandise. I've got mugs and hats, all with the $100 price target on it. We've got a sale which ends any minute now, depending on your time zone. A 10% discount you can get there. And there you go. If you're interested in any of that stuff, or any of my reviews, or anything whatsoever, all my my newsletter, my birthday cards, if you sign up for the newsletter, my links to X, some other videos you might find interesting, links below are just in the description and the first comment that I pin underneath the video. Over here, you'll find more videos in the series that you might find interesting. Virgin Galactic hasn't had a short squeeze. That analyst is talking nonsense. It's institutions buying and setting new levels of support. It's all good. I'm holding. What are you doing? Till next time, as always, take care of yourselves and each other. All right. Okay. Let's have a look. more comments here. Thank you, Martin and Steve, for all your views. I will take a look at MTDR. I enjoy trading gas, but I'm thinking about getting into oils. It looks interesting. I will get ready for an entry price in oil. Martin, Alpha Spread doesn't seem to have an app to install on iPhone. Is one coming? I'll mention it to the CEO. Not that there's any plans at the moment, but if there is, I will make sure that you're the first to know. But right now, no, there isn't any news yet. Starship has been cleared to fly tomorrow. Liam Laffey, thank you. Stephen Lewandowski, yes, James, I've been waiting patiently for oil to drop below $75 a barrel. Always a range of 65 to 90 a barrel to buy 2,500 shares of MTDR. 50. Okay, just going through all those comments. Okay, it's now time to do a review. Our next review is Jason Fallon here. Doesn't matter if he's not, but the people that it doesn't look like he's Jason Fallon is here. Jason Fallon, are you here? I don't think he is, but he asked me to do it this morning anyway, so I will do it. So we are going to Jason Fallon now. So if you want to get your review next, all you've got to do is beat Robbie Cooper, who bid $1. We've got Liam Laffey next, Rocket Labs. We then got NVEX for IndieBones, Disney for Michelle, ChargePoint for Nikunj, Mark Saxby, Figs, Patrick Tui, Patrick Moritz Tui, Omer wants Indie, Ree wants Jose Quintana wants Ree, and Walgreens for Seth. Okay, so if you want any of those reviews, you can add to the bottom of the list, or you can bump it up to the top. $1 will beat Robbie Cooper and go next. But right now, we're going to prepare for Carnival Cruise Lines. Okay, so here we go. Jason Fallon, Carnival Cruise Lines is being done next. You can't jump in front of that now. Let me just take that out. Cut that. Put that to the top. And the time is 41. All right. Okay. That's fine. That's done. Right. I just bought in again. So I bought in now at 142. Just checking the history. 146, 142. And we are now at, 142. Just below. I won't buy any more now unless it goes to like 138 or 135 or anything like that. Anyway, Cherry, what do you think of F-stocks? Ford, I can do a full review for you. If you want me to as a member, you can ask me to do that. Just say you'd like that. If you want to go to the top, you've only got to do a super chat of more than $1, and you will push Robbie Cooper into second place. I'm now going to do CCL though. Thank you, Stephen. That's great information. Thank you. I'm going to see our oil today and get in an entry. I think I will enjoy trading oil. Right. Okay. Let's have a look. CCL, our next review. CCL. Carnival. I've got first-hand experience of this, so I can share some insight, I think. Carnival, CCL. There's Carnival. Let's jump into no dividend. We don't need that. What we do need is we do need the back test. We're lining up a review for one of our members who wants a full review. I'm going to put $10,000 in Carnival. I'm going to put $10,000, whoops, in the S&P. Okay, I'm just, whoops a daisy, I beg your pardon. I haven't done it yet. Just lining it up. Okay, setting up all the software, running it through the algorithm and all the rest of it. Okay, that's lined up. That's lined up. And now we need to bring in this here. And we'll be good to go. Right. Right. Okay. Let me just check the news, if I can use the latest news. That will be good. I can use that. Okay, we got that. Here we go. So, I think we're all set for another review. Jason Fallon. Let me just see if Jason is here. Jason Fallon. No, he's not. But that's fine. He did say if I could do it this morning, so I will. Right. We're all set. We covered all the questions. Now then, what we're going to do during the reviews, which are very, very important things to do, we will go members only. And the reason for this is during the review, if you have a comment about Carnival Cruise Line or a question, if you ask it, I will share it in the video. It can be part of the video. If you do a super chat with Carnival Cruise Line comment or a thought on it, it'll be in the video. If you do a martynlucas.com/tip, you can do a crypto tip. It will read the comment out and put that in as well. All right, so there you go. So let me customize it for members only because we only want respectful comments. I'm going to be very careful because this will be in the video. All right, so if you want to be part of the CCL video, this is a review. It'll be about 20 minutes long. These are very, very successful videos. People find them very interesting and useful. You will see it feature on Alpha. I'm going to give first-hand experience of Carnival as well. So I will share all of that with you. All right. So we're just about to start with Carnival right now. The portfolio is dropping. I'm not concerned though at all. Let me just get ready here. What should I use? Which one should I use? That'll do. There you go. That'll do. All right. I've got the picture I want to use. We're all set. Okay. Good to go. CCL. If it's not too much to bother when you finish the breakfast, the back test for Carnival, could you replace my Walgreens with BYRN? Yes, I can. That's at the bottom of the list right now. It's about 10, 11 days away with the rate we're going at the moment. BYRN. BYRN. Okay. Yes, please. I would like a quick review. A quick review. Oh, you want a quick review? Okay. If you want a full test, it'll go at the bottom of the list. But if you want a full review, a quick review, just remind me again when I get 5 minutes. You don't have to book that in. I can just have a quick look at it for 5 minutes. But if you want a full review, then you can do a super chat to put it to the top, and I'll do it straight away. Or you can, which is currently now $1, and you'll go into third place. Or You can go more than $1 and it goes right after this. Anyway, okay, Carnival, we're all set to go. Okay, we're all good. Let's go straight into Carnival. Right, we're there. Sorry it took a while, but we're there now. Okay. It's time for another stock review. Over the course of this video, I'm going to go very deep dive into Carnival Cruise Lines. If you are one of my members, you can request a full review, and I will do this during a live event, and then I'll put it out as a video by itself. We're going to look at the inside trading, who's buying on the inside, who's selling, look at the balance sheet, intrinsic value, go deep dive into the intrinsic value, look at all the numbers, the margins, the debt position, and so on and so forth, the news around the stock, what other people are saying, what my price targets are, some personal experience of Carnival Cruise Lines, looking at their website, looking at the back test, comparing to other stocks if you were going to invest. The purpose of it is helps you decide whether Carnival Cruise Lines is a good investment for you. And I've got a lot of experience, and I mean a lot of experience with this company. So I'm going to share all that information with you. We are going to start very light, very easy at the beginning of the video, and as we go throughout the video, it's going to get a lot more deep dive. People often say, why are you sharing such simple information? It's because they've not watched past the first minute of the video. It starts simple and gets deeper and deeper and deeper all the way down to the end of the video. So if you are a serious investor, you wouldn't be watching the first few seconds anyway, right? Okay, let's get straight into it. If it's your very first time here, consider subscribing to my channel, ring the bell. I do go live up to 10 hours a day. I'm not sponsored by anyone for anything that I don't use and have on a daily basis. Sensei Crypto supports my channel. I'm on his program. I'm supported by Alpha Spread. I use their software all the time for my investments. I will take no money from anyone to sponsor anything that I don't use, don't believe in, don't have every day of my life. And that's it. So this is the most honest, real channel on YouTube TV. I don't sell videos. I just share my opinions on my shares, and I've had great success. I consistently beat the market. I consistently beat Warren Buffett, and overall, I'm up from $5,000 to nearly 60 grand in 2.5 years. All happened in front of you live on the show. Right, let's get straight into Carnival Cruise Lines. Full disclosure, this is not financial advice. I'm not a financial advisor at all, and I don't own any Carnival Cruise Lines at all, and I won't be buying any Carnival Cruise Lines either, and I will tell you why shortly. There's my portfolio of CCL, and there is nothing in it, and there won't be anything in it. But just to balance that out, my wife likes it. Leah's got some CCL, but it's not for me. I won't buy it. All right, okay, let's go into it. Let's start on a basic level, and let's go down deeper and deeper as we go. So without further ado, let's get straight into Carnival Cruise Lines. And at the end of this video, I'm going to give you some links for software that I use that you can get for free as well. So I think it's quite obvious that Carnival Cruise Lines is a cruise company. Cruise ships operates through the following business segments: North America and Australia. You need to know, though, that CCL owns lots of other cruise lines that you might have heard of. Lots of cruise. There's the Carnival Cruises. If you go on a Carnival cruise, you think Carnival Cruise. It's a Carnival Cruise, right? However, CCL, Carnival Cruise Corporation, own other cruise lines in the CCL brand. So there's lots of other cruise ships you may have been on that aren't Carnival, actually owned by Carnival. All right, it's a very complex business. All right, anyway, we all know what Carnival is. All right, okay, let's carry on. We know, excuse me, the CEO, Josh Weinstein, it's not showing here how many employees there are. That's interesting. Miami, Florida. I've been to the head office in Florida. I've got a great deal of experience with this company, and I'll come on to that in a minute. Founded in 1972. It's regarded as low risk. Maintenance margin, if you were buying it, would be charged 25% maintenance requirement, which is the lowest there is. There's nothing lower than 25%, and it does go all the way up to, excuse me, it does go all the way up to 100%. So this is the lowest it goes. Market cap, 18.26 billion. Price per earnings ratio, negative 10.75. You're losing money, of course, the price to the earnings ratio. No dividend, it's just growth. All right, high today, 1467, 52-week high, 1955, 52-week low, 753, and low today is 1432. All right, the average volume of this stock is 31 million, nothing huge, nothing insignificant either. Today's volume is 4.96, but we are only in the morning, but that does look low for today. Anyway, let's go. And I said, and I get criticized for this sometimes, but I like to make it simple at first and get more in depth as we go. This is simple stuff so far. We're about to get a lot deeper. Right, so this is Morningstar. Now, this was done on November the 3rd, so it's pretty up to date. They're saying it's a strong buy now, a strong buy. I've seen it really bad. Oh, hello there.
Hi, Martin. Can you do full review Aurora Innovation?
Yes, I can, Francisco. You are one of my members. I will now put you in first place after this one, just above Robbie Cooper, who bidded a dollar for his review. You'll now be next on the list. Okay, so we've got a 60% buy, hold 30%, and only 8.7 selling. Now, what the bulls say, despite a temporary pause in Asia Pacific, a return to the market remains promising after COVID, as the four largest operators had capacity for nearly 4 million passengers in 2020. And the bears say new COVID-19 variants, the institution of no sale orders, geopolitical concerns, or border closures could pressure the profits. I have to say, having worked with Carnival, and I will cover that in a minute in great detail, the bears are completely wrong there. There's no issue with variants and surging of COVID-19 now. That's going to affect the cruise line company. So that's the bears are very weak right now, which is why the analysts are saying it's a strong buy. Geopolitical concerns. Well, Carnival Cruise Lines is mainly in the United States. It does own other cruise lines, like I explained before, but CCL's biggest component is Carnival itself, and they're all US based. So there's no issue with going around the Caribbean, Miami, California. And I know I've been on all of the Carnival ships, so I know what I'm talking about. So the bears really are clutching at some headlines where they've read it somewhere which doesn't actually apply. So I don't agree with the bears. The bulls, however, they're talking about rising, going back to the original, back in 2020. Those days are gone. So for those of you that think, oh, great, the share price went down and nobody was sailing, it's going to go up now. It's bound to go up. That's why my wife bought it. I said, no, the industry is changing. This type of cruise ships are changing. The customer is changing. And just because nobody was sailing for a while and Carnival went down to nothing and now it's going back up again, doesn't mean to say it will go back up again. It lost a lot of money during that time. I know, I've worked for them, and it cost millions to have billions actually, to keep all the ships in dry dock, minimum staff. They lost a lot of money. The share price was devalued and devalued and devalued, and it may never return. It was so badly damaged. Now, not only do I say it may never return, I don't care how many people think they're going to go back on Carnival. The style of cruise line industry has changed. The style of cruise ship has changed. Carnival has a terrible record when it comes to the environment, and we know people don't want to be cruising on environment disaster policies, cruise lines. And before anyone says Carnival is always telling you how wonderful it is and how much I have worked there. I know the fleet captain. No one knows more about Carnival as an investment than me. I've worked on every single one, and let me tell you, the fleet captain and the office. I've been the office. All of this stuff. Carnival Cruise Lines is a very dirty company, right? It's got a lot of connections in Cuba. It's a dirty company behind the scenes. The way it treats its staff is terrible. They will tell you it's great, all the guys from the Philippines, because they come from a country where they get paid nothing. So when they work for Carnival, they think it's great, but actually they're being paid peanuts. They're being abused, but they think it's great, okay? Carnival is a terrible company, and its environmental issue, they just beat the target they are presented from the environmental office, and the target is so low and the amount they beat it by is so pathetic. They just do what they need to do, but they are trashing the oceans, and there's a good reason why I say that, because the competition is going to crush Carnival, right? I will come on to that in a minute. So anyway, that's just a little bit of my view, and I will show you some pictures of me actually working at Carnival in a minute. I've been all over Carnival, every ship and the office. Okay, so uncertainty, it's very, very high. It's poor. Look, stewardship, the CEO, poor. Management of the company is rubbish. Those that know, I do not buy any company where the stewardship is poor. Fair, good is whatever, but poor, no. Economic moat, none whatsoever. No protection to this company going bust, zero, okay? And anyway, as we can see, things have improved recently. No surprise, they've stopped being in dry dock. More people are cruising with them and they're making money. I mean, of course they're going to go up, but do you think it's going to go to where it used to be? Not a chance in hell, and we'll come on to that in a minute. Anyway, let's go deeper now into the stock. This was just the basic level of my opinion and so on and so forth. I'm not sponsored by them. I don't care whether they go up, down, left or sideways. I'm just telling my members the facts, okay? Let me show you the website. Very, very important. They present themselves quite well. They are regarded as the fun ships, not quite the fun ships as they used to be 20, 30 years ago. There were incidents with crew members, nothing to do with me, wasn't there 20 years ago. Crew members having fun with the passengers, doing all kinds of things. A few people took it too far, and now it all shut down. It's not the fun ships anymore. You can't just do what you like on Carnival. There are rules now. There were some incidences of different things that happened over the years, and now you cannot socialize with the guests in this way. So the cruise line has changed dramatically over the last 20, 30, 50 years. You will see on their website, they are presented as a very fun McDonald's type of company, which they are. They are a McDonald's style company, cheap and cheerful, but they're getting cheaper and cheaper and cheaper. Their margins have been cut. Their profits have been cut. As you can see, they're always on sale, always giving it away. Quality companies never offer discounts like this. They're always offering discounts. And the reason for it is they make most of their money not on the cruise line, but you in the casino. I told you I knew a great deal of this company from top to bottom. No, I don't think anyone investing knows as much about Carnival as I do firsthand, quite honestly. They don't make money on the cruise line, the cruise itself. They make money on you gambling in the casino. So you've got to have money to spend. People haven't got money to spend. They go on Carnival because they get the cheap away from home, cheap holiday, cheap the alcohol. The food's all free, the drinks are all free. The alcohol you can buy in buckets, like a package deal. So you can get a very cheap getting drunk holiday. If you're not spending in the casino, though, Carnival don't make any money. So you need to understand that the workings of Carnival. So for me, the website is what the website is. It's not a great website. I always like to talk about the website because it's a presentation to the customer, but also it's information for the shareholder. It's a very, very basic website. I'll give it no more than 4 out of 10. Which is one of my lowest scores. It doesn't use innovation in any way. It doesn't capture new audiences. It's very much back in the 80s, hasn't really changed. And it doesn't present itself very well, in my opinion, to the investor. All right, let's now go, talking of the investor, into the investment side of it. We're going to get a bit deeper now into into the stock. All right, let me just clear that screen there a minute. And if you want to do any comments during the making of this video as a super chat or as a crypto giving, it will give it on the screen and I'll read it. It will read it out automatically, so you can be part of this Carnival review. Now then, just to give some color, I did say to you that I've worked extensively on Carnival. There's me on one of the cruise ships. Look, got my little pass there. I'm just having a little beer on the beach. That's in Mexico somewhere. I'm not sure which ship that was, but I've worked on every one of them, and not just Carnival, all the others in there under their umbrella. I've done nearly all the cruise lines of the world, the P&O, the Caribbean, Holland America, Disney, Athenia, Viking, you name it. The QE2, that's not part of Carnival, but I've done nearly all of them, and every one of the Carnival ships itself. So I think there's about 35 ships. Anyway, let's get back into the trade. So there's just some color there just to show you what I was doing there. Right, now then, what we're going to look at now is the value of the company. This is very, very important, right? We're going to start off with the valuation. Best case scenario. We're not in a best case scenario because the sort of people that go on Carnival, it's a McDonald's cruise line. It's not where the money is. It's a cheap budget line. But Carnival is predominantly the main part of CCL. That's why I'm focusing on Carnival. If you've got no money, like I said, to spend in the casino, Carnival don't make any money. They don't make any money from the cruise ships itself. The actual holidays themselves. Best case scenario, 66%. Well, if this was a good valuation, we should be at 100, 120% best case, and we're certainly not, specifically because of this clientele who don't have much money to spend in the casino right now, and that's getting squeezed and squeezed, and we know interest rates are going to come down, but not for another 6 to 12, no, not until the spring, the summer. But pressure will be there for the consumer with inflation for another year or two. They haven't got the money to spend in the casino. So that's very, very underrated, and that's only 66%. Base case, 41% over undervaluation. Again, not enough for such a high-risk stock. I think we're more in the worst case, 29%. However, looks good, right? On paper, you think, well, the intrinsic value looks quite good. You have to remember that you can have a valuation trap. This is not indicating one through our algorithmic software. I like that word, right? Very advanced way we present this information and build it all out. However, you need to look at other things like I'm explaining about the fundamentals of the business, the reality on the ground, so on and so forth. It looks cheap and people are buying it. It isn't cheap though. And that's why this whole review is important. Okay. Wall Street give it 18% target there. Relative value 59. DCF is down 59%. Intrinsic value 29%. Now you've got to remember you could, without the risk, just buy the S&P. We'll cover that in a minute. Anyway, historical profit 50%, but we can see how over time that profit has dramatically come down. And now we've had to devalue and devalue and devalue and dilute the stock and dilute the stock, lose money, lose money, lose money. Now we've got to make money out of the returning customer who hasn't got any money to spend in your casino, which is where they make their money. They don't make their money on the holidays. Okay. So historical value isn't going to go forward into the future. This is just experience, right? Now then, fundamental analysis is important, right? We can see here how it dropped off. This is no surprise. Dry dock, that's when the ship was kept in dock, not at sea, not making any money, but costing money. Operating income, down the toilet. During that same period, no surprise, things have started to recover, 20 billion back in August. Now analysts are giving it a prediction, but if you think about it for a minute, people haven't cruised with Carnival for a long time. This curve should be accelerating because people haven't been spending money on holidays on cruise lines all this period, and yet it's flat. It's rising very slowly. And that's not taken into consideration because analysts can't value this like I can. They're not spending in the casino. So why would we even get this? I don't think we will. I think it will go flat. Well, flat's no good for an investor. Great, have a great time. Go on a cruise ship, go to Mexico, run around Cozumel, have some fun. Great, nothing wrong with a holiday, but as an investor, it's not one for me. Net income, we can see it's dropped and it's improved over the last period at 53%, but it's up 53% from negative. So it's up a lot, but it was down a lot. So it's not that up at all, really, if you compare to the previous periods. We are not exactly doing great, right? Anyway. Operating cash flow, again, look, up 205%. Don't get dragged into that. It's still way below where we were before, and we have not had a curve upwards. We're still down, and we're going to stay down. Capital expenditure. Now, you can see here what I just explained. Capital expenditure dramatically dropped, came down because they are keeping the ships in dry dock, spending money. But, and very important, with the amount of money they're spending, all they're doing is paying for losses. They're not actually going to the next generation of cruise ships. And what I mean by that is there are companies now building solar-powered cruise ships. Carnival is still a diesel ship. All right, it will tell you it's cutting back on the environment impact. It does it by the very minimum, just enough to allow them to say we're doing something, but actually they're doing very little. So it's, and I know I've been there. I said, why don't you change all these bulbs to LED? That would cost too much money. We only need to achieve this. Because I'm in the environmental department, right? I'm like, well, we could do better than this. Well, as long as we hit this level, we get the tick, we carry on cruising, making money. We'll go, that's disgusting. We could do far better than this. No, we only do what we need to do. Rubbish. Well, other companies are coming along going, we can make this entire ship solar. We can do this, we can do this, we can do this. And they're investing on the future of cruise tourism. Carnival ain't. And they can't afford to, even if they wanted to. So that's really, really bad, right? Cash flow. Again, you look at the cash flow, it's just gone to nothing. However, it's up 77%. So the headline news, people that want to talk about it on Bloomberg and CNBC and all the rest of it, oh, buy it. It's up 77%. It's up 77% from minus nothing, right? If you can compare it to what it was before, it's still rubbish. So you can see nothing there. Right. Now then, do you need any more convincing? You might have got the idea that I don't think it's a good buy. I think it's the worst thing you could possibly buy. Right, assets, 49 billion. That's all the ships and all that stuff. Great. Remember though, those assets, the biggest part of the assets for the company is its ships. The ships depreciate in value, and when we replace them with more modern ships and more environmentally fit ships from other companies, just like your gas car is going to be worth nothing in 30 years' time because everybody won't want it. They'll have an EV. Right? 49%. A lot of assets there. Cruise ships depreciating and will eventually fall off over a cliff. Their liabilities, 42 billion, just behind it. So their liabilities are just behind their assets. And the assets could drop like a stone. So do you want to own a company where your balance sheet is virtually parity, the same, you know, that your debts add, your liabilities equal your assets? That not that far off. And considering your assets can depreciate quickly over time, I don't think that's an investment for me. Anyway, if we look at the liabilities as well, what we will see, this is what's really painful for Carnival. Long-term debt, not short-term, long-term debt. $29 billion at an interest rate that is going to stay high for another 6 to 12 months. Even if it pivoted, it's only going to come down by 0.25%. It's going to stay high for a long, long, long time. And people aren't spending in your casinos. I can't see how the company can survive, let alone be a good investment. Anyway, looking at the gross margins, 47%. You see how it fell off a cliff. Minus 200, that's what happened. Now it's coming back, but the margins are still lower than what they were. 40%, 41, a couple of times 30%. Yeah, we've had a couple of, we've had a couple equal and a couple beat. So margins have improved slightly, but I don't see, and are they predictions? No, they're not. No, they're not. Margins have improved slightly. I don't see that continuing though. So anyway, operating margin, net margin, you can see it on the screen for yourself. All right, now then, exactly what I just said. Before I even looked, I'm doing this live, I'm giving you my opinion, and I didn't even look down at this. Profitability, 28. You cannot be buying a company which is as low as 28 unless it's got some huge upside, huge potential, because it's investing in itself. It's not investing in itself, it's investing to stay alive. So 28% profitability score is rubbish. Rubbish. However, the lowest ever I have ever seen of all the reviews I've done, I don't think anyone has seen a review lower than 14%. 14% solvency score. That is the lowest I've seen. I think that was lower, if I'm correct, than FFIE, which ain't selling anything, right? I just bought that as a moon bag. I think it was better than that, which is 90% going bankrupt. This is even lower, 14%. You cannot make a sound investment on a company with a 14% solvency score. In other words, 86% likely it's going to go bust. Well, I don't know how you want to value your investments, but I would regard that as a bad idea. Anyway, Wall Street targets. At the best case scenario, which we know is not likely, 81%. For such a high growth potential from such a low level, we'd be expecting way more, 100, 200%. On average, and we're not average, we're only 4% better than the S&P with no risk in the dividend. There's no dividend here. What's the point of that? None. Lowest forecast, you're going to lose 51% of your money. That's more likely. So from a Wall Street standpoint, and they've not worked at the company, they don't know what I know, they're not giving it a good rating, so I'm damn sure that I'm not going to. Anyway, competition is not relevant. They do stand on their own. Now then, this is interesting. In the last 3 months, in fact, October the 19th, just a couple of weeks ago, Weisberger Randall, the director, bought 1.2 million shares of CCL. Now, before we all get excited and jump up and down and go, that's good news, this company has a very dark history. It's got offices in Cuba. It does some very shady things. I have to choose my words carefully. It's not everything it seems to be. It's not all good. This I would regard as manipulation. It's real. It's happened. The director has spent 1.2 million. It's nothing at all to move the stock price. It's nothing in percentage terms of the company itself. It's not a big story, but it looks nice. And it makes the sort of people, that cruise line, it's a low budget customer, want to buy the shares, because most of the people that I cruised with, that I worked with, like to buy shares in the company they cruise with. They like it. The diamond customers, the platinum customers, they feel rich if they walk around, they get extra benefits. I'm a shareholder. There's that real ego thing. If they had a real ego and a real pride, they'd be on the QE2. They'd be on Crystal Cruise Lines. They're not. They've not really got that sort of money, but they want to think they've got that sort of money, right? So they like to walk around telling everybody, I'm a shareholder. So the director knows that. He knows that his diamond customers, platinum customers, and all those people love to own shares in the company. They all do it because they get discounts in the casino. That very fact should tell you what sort of company this is. The people that are shareholders get discounts and benefits in the casino. Do I need to say any more? I mean, I'm in a very privileged position. I know a lot about Carnival, right? So that to me is more of a headline to get people to go, the director's buying shares in the company. He's actually bought a handful of shares at 1.2 million. Makes no difference, but it does grab attention. And I wouldn't be surprised if they promote that to get everyone to think Carnival is in a great state. It isn't. It isn't. That is not an encouraging sign. It looks like it is, but it isn't. The stock market is very manipulated. Wall Street's very manipulated. You need to understand the whole of this stuff. Right. Let's have a quick listen in to this.
Carnival CEO Josh Weinstein. Josh, good to see you again. Thanks for making time for Yahoo Finance. And to me, I have to be upfront with you. This is a head-scratching market reaction. Why do you think the stock is selling off in what appeared to be a pretty darn a good quarter and pretty darn good outlook?
Get ready for the CEO. Get ready for and I've not watched it yet, but get ready for the pitch, the sales pitch. All right, not the numbers, the sales pitch. I'm predicting before I watch it, that's what we're going to see.
Well, our job is to deliver what we say and ideally out-deliver, and that's exactly what we did in our third quarter. We out-delivered on revenue, on the booking trends, on the onboard spend. So really, I couldn't be prouder of the team for what they.
Onboard spend, you see that mentioned there, the onboard spend. That's where their margins have gone up more than I actually anticipated, actually. So I'll give them that. That was a good tick. They said they've improved on margin spends. But to say they've gone up, well, of course they're going to go up. It was nothing before. We've got to get back to where it was, and that's not what I see. That I can't see that'll ever happen. Hence why it's not a good value, not a good time to buy it. Not a good company to buy ever now, I don't think.
They've accomplished, and we carried that forward, and we upped our guidance for the full year, and we said we expect our per diem trends to continue as we continue to just close that occupancy gap back pretty much entirely to historical levels. As a result, we took up our yield guidance for the fourth quarter, and the momentum is great. So, all I can tell you is we'll keep trying to just deliver on or out deliver, and hopefully the stock will match up with that.
Is there something near term that's giving you pause?
Well, from my perspective, as far as how we're running the business, really not much. On the demand side, all we see are green arrows going up. We've got record booking levels. We're 10 points better booked today than we were a year ago, looking out for the next fiscal year. On top of that, we're booked at higher prices. And so we've got some stickiness as we look at.
That is not accurate. If you look at that record prices, that is not accurate. He's talking about the prices advertised, but actually people pay. This is why you need to do all this research. I know that the prices are higher, but the discounts are greater. So what people are paying is less than it was before to entice them back. It's not, just because we're selling at higher prices. Well, you're not selling at higher prices, you're advertising at higher prices. There's a very different thing.
Out over the next 12 months, the onboard spend levels haven't slowed down. So the absolute amount that our folks are paying when they're on board for experiences, be that F&B, shore excursions, casino, communications, you name it, that hasn't slowed down. And one of the most encouraging things is, a year ago, we were talking about a bit of a dichotomy between the pace of the recovery for North America versus Europe. Well, I'm really proud to say that our European brands, AIDA, Costa, they outperformed too. And they just came off of a third quarter where their yields were higher than 2019. And they're driving a lot of that booking outperformance as we look forward. So as far as I'm concerned, from that perspective, everything that we're trying to achieve, we are hitting the mark and then some. Remains to be seen.
Josh, I thoroughly read your earnings release. I led to, of course, listen to the earnings call. And your report, booking strong, occupancy strong at higher prices. You're calling out good things for the next 12 months in terms of forward bookings. Square that up with what we're seeing from the U.S. consumer. We're seeing credit card delinquencies rise. We're seeing auto sales slow, but yet consumers are getting onto a cruise ship. How do you explain that?
Yeah. There's a lot of woolly information here. Yeah. I'll be interested to see what his reaction is to this.
Well, I think you got to start on the premise that cruising is inherently an unprecedented value compared to land-based alternatives. We quantified anywhere from 25 to 50%. So ideally, we want to outperform in any environment.
That is true. That is true. It's a cheaper way to holiday on a cruise ship. That is true.
And in an environment where maybe the macroeconomic trends are getting a little worse, candidly, we've heard about a recession for the last 18 months, and I'm sure it will come. But let's say it is coming. You've got an experience that cruising can provide, and the relative value, making your vacation dollar go further, plays very well into cruising. And so maybe
that is true, but like he said, things are likely to get worse for the consumer, and they make their money primarily from those casinos, not the price of the cruises. I don't see it with the credit card delinquencies and rising and all the rest of it. I don't see the customers spending as much money as you're kind of advocating to it going forward. I really, really don't.
There's just a combination of the fact that we offer a great product. And people are really starting to see the value. We're really trying to push on that messaging so people who have never cruised before can really understand that and come sail with us. And I think that's working. As a matter of fact, if you look at our trajectory of our guests carried, our loyal guest base is pretty much been consistent in absolute numbers when you look back from the fourth quarter of last year all the way through the third quarter. A huge amount of growth, and it's all been really pushed forward by first-time cruisers and new to brand. So the message is getting out.
Do you get worried that if we do get this government shutdown, your business in large part is all about confidence? I have confidence that I'm going to have a job a year from now.
We're not going to get a government shutdown. That's not going to happen. And I don't see how that would affect Carnival anyway.
Now I'm going to put a deposit down on a cruise vacation. There is confidence in the financial markets. You're a company that is cutting debt, but still has a lot of debt on the books. What would a government shutdown mean to a business like yours?
That's a great question, and I wish I had an answer for you. We've been through government shutdowns before, and we've been through recessions before. And the good thing is we are a resilient business because of that value play, because of the advanced nature of our bookings, where we have a pretty good amount of visibility as opposed to lots of other industries. And again, holidays, vacations, they're sacred to a lot of people. And so they will move heaven and earth to figure out how to make ends meet in order to protect the sanctity of the.
He's right there. The people that go on Carnival Cruise Lines are extremely loyal to Carnival. It's like McDonald's, as I say. It's the McDonald's, not all the ships, because they like they said, they have other brands in Europe and so on and so forth, but the predominantly is the Carnival ships. They are like McDonald's. People always shop at McDonald's, always buy a can of Coke. It is like that, and they're not going to ditch it anytime soon. That's true.
Vacation, and we appreciate that tremendously. We understand how big of a responsibility that gives us to make sure we deliver, and the NPS scores are great. The satisfaction scores are great. So we think we're really clicking on all cylinders.
I need to give you some props, Josh. I talked to you at Milken, and you really made a key point to point out, Brian, we're cutting debt, and we're going to cut it aggressively, and you have. Where do you want to be in terms of debt for Carnival looking out over the next year?
Well, I'll tell you, we've come off of our peak of a bit over about 35.5 billion. We're already down over 10%, and I'm real proud of that trajectory. I'd say as we look over the next 3 years, we've set out targets that get us through 2026. And what we've said is very clearly, we expect to hit investment grade credit metrics by the time we're done with 2026. And so that would imply that we've got another 10 billion to go, and we expect to be able to accomplish that over the course of the next 3 years. I would say next year is, relatively speaking, when we have the most growth in capacity. We've got 3 ships coming next year. So that'll be a year that won't necessarily be as big of a driver of debt reduction. But after that, with 1 ship in 2025 and 0 ships coming in 2026, that gives us a tremendous amount of headroom to kick off billions of free cash flow to directly go to pay down debt, because getting our balance sheet back to a
that is critical to the I struggle to see how they could get there that quick, but that would be good if they did that. No question about it.
Place is very much a primary focus.
Good to see that narrative continuing. All right, so your bookings are good. You seem like you're ready to withstand if a government shutdown of any kind. Now, what about oil prices? We have seen oil prices tick up to about $100 a barrel. How much of a headwind is higher fuel to your business right now?
Yeah, no doubt.
As we know right now, I mean, this was a month ago. Oil is coming down, so this will benefit them. As I said, they are a diesel ship. They're not solar. They're not like anything like the future of ships. What other companies are starting to bring online, but they are subject to oil prices. It's good to see oil price coming down for them. That will help.
No doubt that hurts, and it covers up actually a lot of the good things that we talked about, I think, on our earnings call today. We outperformed in the third quarter, for example, and we actually raised our guidance, our EPS guidance for the full year. It's about $200 million worth of good things that we're doing on the revenue side, on the fuel consumption side, which I'll come back to. But unfortunately, the change in fuel prices and the dramatic nature of this spike has basically taken $125 million or so away from us. Now, the one thing that we are maniacal about is you can't really control the price of fuel, right? But what you can control is how much you use.
Yeah.
And no matter what the environment is, no matter what type of fuel we put into our ships, if we use less, we save money. And so we actually are going to be outperforming what was a pretty audacious goal of a 15% fuel usage reduction versus 2019 and carbon intensity. We're going to hit 16% this year. So 16% reduction in unit consumption.
Do you remember what I said at the beginning of the video? Carnival are always doing this. They get set targets and they beat it by 1%. That I just showed you. 15%. We're going to beat it by 16% this year. They get these targets from the environment and so on and so forth. There's all sorts of things they've got to do with dumping the waste in the sea, how much fuel they use, yada, 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 all these things. And they always beat it by the smallest amount. And when you discuss the environmental issues with people on the ships, they can go, yes, we could do way better than this, but we just do enough to keep our license and our ticks in the box. They're not about the environment, and there are companies coming that will absolutely wipe the floor with Carnival, and I hope they do so as well, because the environmental impact of Carnival on the oceans is terrible. There's a whole island of rubbish, flat plastic, floating in the Gulf right at the moment, and it's really terrible and mainly caused by Carnival, and they won't mention that on this interview.
Consumption that translates to a $375 million savings in 2023 as a result of that activity.
So there we go. A little bit of information there. Hope that was of use to you. We've got a bit more to do yet. We haven't quite finished our review. This is a full review. We're now going to look at sentiment. In the last, if we've got any news there, when did this come out? Let me just check. No, that's old news. We don't need that. What about the sentiment? Now, this is important of the investor. Over the last 90 days, we had 53% positive, 22% negative, 30 days, 35% negative. That'll be in the range of the oil prices going up. Last 7 days, gone down to 27, and today, 25. So there's still lots of negativity, but there's some positivity around the stock as well. So let's move on. And I want to share with you the short interest. There we go. Percentage of shares shorted. 13.52. 20 is excessive, and that's when you start talking about short squeezes, but it doesn't mean to say at 20 you get a short squeeze. GameStop went to 100% as we started to short squeeze. So we're at 20 with Virgin Galactic 22 to give you an indication. This is 13.52. It does have a lot of short interest, not excessive. Doesn't mean we're going to get a short squeeze. But when you compare it to profitable companies like Apple or Amazon, they're down at less than 1%, or Google and things like that. So we are high, elevated, but not excessive. It just shows you there's a lot of people, a lot of investors, if you call shorters investors, a lot of people regarding that, it's worth a good bet of it going down. We don't need a short squeeze. We just put pressure on the stock going down. So 13% is still very high. A lot of people are betting on it going down. I never short stock. I don't believe in it. I think it's wrong. But I appreciate that you do it because it allows me to make money from you anyway at some point. But shorting is part of the game. It does have a lot of short interest. So there we go. We've got one final thing to do, and it's very, very important. It's called the back test. I've run it through my software and given you some very important information. Here it comes. This is the back test. If you're going to invest in Carnival, you've got to know if you put 10 grand in the S&P since 2011, which is as far back as we can go, 10 grand in the S&P, how much money would you have? Well, you'd have 4x in S&P, you'd have 42 grand. But Carnival, you'd be down at 3,298. You can see there, Carnival is the blue line, and the S&P is the red line. Now, it's quite obvious to see the impact of COVID over Carnival. No surprise there, but the trajectory, if you look at it, was already, this is what everyone doesn't want to talk about. This is the most important thing I've said so far, is from 2018, we were already going down compared to the S&P. COVID wasn't happening here. This isn't COVID. This is boom time. Everything's great. No, not good. The cruise line in its current shape is declining, despite what the CEO has to say. Then it fell off a cliff. Then it kind of kept going down as the S&P kept recovering. So there you can see quite clearly, why would you buy Carnival Cruise Lines when the debt is massive, when the interest rates are going to be held up, when the customer is not spending in the casino the way the CEO wants to present it, when the environmental issues are hardly being, they're just beating it by the smallest amount. So other more environmentally companies, solar companies, solar cruise lines and so on and so forth are going to come on and wipe the floor with it. Certain things he said was positive and correct, but overall, I don't give this a buy. Overall, I would say no, it's not a buy for me. I think I've demonstrated why I think that on many, many levels. The debt situation, the customer, the competition, where interest rates are going to hold for another year, customers not spending the same way. People want a different style of cruise now. They were already failing in 2018. They don't talk about that. They massively diluted the stock. So even if things do improve, they're not going to improve anywhere near to get back to the price that it once was. If you're buying it because you're buying it at $14 and you think, I can make 15, 16, 17, 18, I don't know. I don't even see that. But maybe you do, then fine. But if you are, even I don't see that though. I actually see it going further down. However, if you are looking at Carnival thinking, hang on a minute, I can see it going back to where it was. I can see it going up to $69. I think you are very, very, very much mistaken. I wish you the very, very best, but it's not one for me. There's my full review today on Carnival Cruise Lines. I hope you enjoyed that. Click above my head for all the links. If you like my software that I use, my members get a lifetime discount. You can get a free plan or you can get a 10% discount, which makes my membership free. Everybody else, I've got a referral for you as well. You can go up there and get a free plan and some discounts as well. Go and check that out. Look in the description for more links, more reviews, and my newsletter above my head and down. It's basically up there and down there. I don't know. I just do that. Hang on. There you go. I just do that. It's in the description and above my head. You can find all the links to everything you need, my newsletter, my X account, and all the rest of it. And if you want a full review, you can have a full review, and I will do one for you as well. All right, there we go. Over here, I'll put more videos that you might find interesting. I do reviews on every single stock my members ask. So there's a full playlist here of millions of reviews. There's about 12. All right. And then millions sounds better. Sound like I work for Carnival. And go down here and you'll see more interesting information. All right. That's it from me. That review was done for Jason Fallon in Australia. Thank you very much indeed. As always, take care of yourselves and each other. All right. The Carnival Cruise Line has been done. Okay, Jason Fallon, we've done that. Let me come out of there, back to the main show. Let's see my portfolio. It's gone down nearly 5%, but we're starting to see it come back up again. All right. Okay, I made a small profit this morning by buying and selling Walmart. I bought it at the bottom and I sold it when it went up to its morning high. And I did that, just a small trade, but I made some profit. Okay, now then, let me go through our positions. We're starting to see a bounce now. Let me have a look. How did Walmart end up in the end? Yeah, there we go. Walmart. This is what I did this morning. I bought Walmart here. It was an overreaction, but not that much. And I sold it here. Not in it now. It's very expensive. This stock is priced to perfection. It's expensive, but it should be. It's a good company. However, it's priced to perfection. And things aren't perfect with Walmart, and the dividend isn't worth its salt. It's like an Apple dividend. It's a token, but it's not worth it. If you have millions of shares of Walmart, maybe it's worth something to you. But if you're an average retail investor and you buy yourself 10 shares of Walmart, don't expect to make much money on the dividend. I think it's like 50 cents, 47 cents, which I've got stocks with lower than that or same as that. But the stock price is a third or a quarter of the price. It's not much. The dividend doesn't pay out. It's not worth it. It's a growth stock. All right. Anyway, I think that's it for today. We've got the Carnival earnings. Sorry, not the Carnival earnings. The Walmart earnings. Oh, there we go. It's now delivered. We're now going to post the Walmart earnings. So I will give you the link. If you'd like to join me, it'd really, really help my channel. I'm going to ask you to do me a favor. So this is a conversation to my members. If you'd like to help support the channel in a really, really positive way, let me give you now the link to the Walmart earnings. And as this video finishes, it will premiere and you can all join me for the Walmart earnings. If you heard it earlier, just let it run. It really helps promote the video. It would be a massive help to the channel. It'd be very, very kind if you could do that. So here we go. Let me put the Walmart earnings. Let me put the thumbnail on it. And I can schedule it out. Walmart earnings edit. It's exactly as you heard this morning. Some of you missed it, but it's improved sound quality. And I cut the bit off at the beginning when I'm talking and the bit I'm talking at the end. But it will then give you the opportunity to join me for that. Right. Now, when it first premieres, because it hasn't had time to fully process, it'll be low resolution, but it'll improve over the next half an hour to an hour. But because I've come to the end of my show and because you are all still here, it'd be nice, just as a little help to me, is if you did actually, join me for that. So what I'm going to do is I'm going to set it as a premiere to start in like 10 minutes. So from private to public, March the 16th, which is now. It's good to listen into the Walmart earnings. It gives you an indication of the direction of the consumer. That's why I do all these earnings, right? And I'll make it 10:20, which is in 8 minutes. 10:20. All right. 10:20. There you go. Set as a premiere. March 16th, November the 16th. There we go. All right. Okay. That's all set. So if you could join me for that, that would be very, very nice. There you go. The Walmart earnings. And now I'll send this video. I'll give you the link to hit what we're watching right now, which will take you directly there. If I put a link on it. Let me take you back now, give everyone the chance to talk again, because we've done the review. Go, subscribers can now, everyone can talk again. Let me take it so it will go directly to the video. Here we go. And okay. And then we'll just do day trader of the day and any questions that we have for anybody. Let's have a look. For some reason, it's not showing up. Let's see if I can find it. We'll do day trader of the day in a second. Hang on a minute. What's going on here? Have I got an error? Just bear with me a second. We'll do day trade of the day. Any more questions? Anyone can come back in. Our next review will be, was it Robbie Cooper? No, did I get someone? Francisco R. Hi, Martin. Can you do a full review of Aurora? Francisco. Right. Francisco R. He's now gone to the top. He'll be next. Right. Oops, a daisy. Francisco R. wants Aurora Innovation. Aurora Innovation, and he has bid 199. So we'll put his to the top, and Robbie Cooper will be next. Good. Francisco R. Sorry, I missed that. Aurora Innovate. I've got it now. I apologize. November the 16th, 10:20. There we go. Set as a premiere. That's why I didn't click that button there. All right. Okay. Sorry about that. All right. We'll do day trader of the day now. Drop your scores in. We've got to get out of here. So put your scores in. Day trader of the day. And we're going to go directly live to the Walmart earnings. I hope you will support me with that. It helps the channel enormously. There we go. Now it's worked. Okay. Drop your scores in, folks. Getting a few issues this morning. I don't know what's going on with my channel. A few little issues. Things aren't showing up as they should. Apologize for this. Let me give you the link here. Here we go. So, Walmart earnings. There you go. If you want to join me for that, there it is. Just dropped into the chat there. All right. Okay. Down 4.05. I'm down 4.78. Down at 3.5. Down 4.5. Down 5.32, down 4.3. George down 8.32. Sherry is down 2.47. Stephen Lewandowski down 0.69. So that's interesting. He's been hardly down and hardly up. He's just sort of bouncing around there. So that shows you the style of his portfolio. I win. George Otter T. Right, okay. Congratulations, Stephen Lewandowski, I think, is the winner. Let's give him a big round of applause. Thank you very much. Thank you, Stephen Lewandowski. You win. Down 0.69. Give them a thumbs up. Absolutely fantastic. All right. That's it from me. I will see you back later on, folks, for the closing bell. It's now time to rock and roll, get out of here and roll the credits. I've given you the link for the Walmart earnings. Please do join me for that. This video will go automatically there. Let it run in the background if you can't watch it. It would really, really help. Thank you for the discount link last night at such a late notice. Much appreciated, Seth. You're absolutely fine. My absolute pleasure. I think it's still running for a few more minutes. Depends on time zones. I think it was set in the UK. You might still have a few minutes left. It runs out today, and it's all to do with the time zone. So I don't know exactly at what hour it runs out. I can't tell you. But anyway, there is the link if you've not got your discount from the shop yet. It runs out any minute. Some people have already run out. Some people it hasn't. All right. Okay. There you go. That's it from me. Let's get out of here. Let's roll the credits. Do come and join me for the Walmart earnings. It premieres in 1 minute from now. This video will take you right there. And between now and then, I'll see you back this afternoon. Roll the credits. Let's rock and roll. Let's see what we have today. Stars of our show. Gods for Me, Mitch Talks, new subscribers, super chats, Robbie Cooper and Francisco R. Thank you very much. Can you put your membership link up, please, Martin? Yes, I can. The membership link is at Malk UK. Oh, Malk's lost his membership. You'll lose your history if you don't set auto renew. Here it is. It's on the home page of the channel on the membership page. There is the link there. Okay, I'll give it you 3 times. If you look below on the home page, it's here. Look, you got the home page of the channel. You click membership, and it will show there. It won't show for me because I'm signed in with my own account. But there you go, membership. That's what it's all about, right there. If I click videos, there's the Walmart earnings. It's premiering now. There you go. The Walmart earnings premiering now on the home page. See you there in a minute. Let it run through. I'd really appreciate if you help me on that one. That's it from me. I'll see you back for the closing bell. As always, take care of your money, yourselves, your crypto, and each other. Bye-bye for now.